Welcome to Friday Market Insights. I am Ian Lesher. I'm a partner and portfolio manager with Janus Capital Management, and I'm joined by Mike Thiessen, who is also a partner and is our Director of Sustainable Investing. So Mike, we might as well start with the usual. And what has happened this week in the markets?
Yeah, so it was quite an exciting week this week in the markets. Overall, the markets were down, so S&P 500 down about 1.5% this week. On the vaccine side, it was quite positive. Canada approving the vaccine, and the US FDA approving it or at least recommending the approval for emergency use. And then over this weekend, there's another committee that's going to be deciding whether it should be approved for the American public. So quite positive there, but it was all weighed down by more negative news when it came to the US stimulus bill, and then also the tech sector. So when it comes to the stimulus bill, there's really trouble moving anything forward right now. There's a lot of argument, debate over certain issues like a business liability shield, like over aid to states and local governments, how that's going to happen. So it does seem like there's a real gridlock there. And then when it comes to technology, there was the FTC antitrust lawsuit against Facebook, and there's a lot of implications around that for Facebook and for other tech companies. So that's really weighing down on the NASDAQ this week. There's other downgrades in the tech sector as well. So that all heavily weighing down on the overall market. So not good for the market, but good overall for the vaccine, I guess, this week.
Right. So we might as well get right into the COVID vaccine. What is the effect of, and what we're talking about is the Pfizer vaccine that's been approved by the UK, it's been approved by Canada, and it is close to being approved fully by the US. So what's the impact of having a vaccine ready to go today for Janus clients?
Yeah, well, I think that it's very positive for the long run, and I think that it is positive for the economy in the short run too. I think in the long run, it means that we're going to be building back our economy to something that's somewhat similar to 2019 style economy, but of course we've adapted so much in 2020 that I don't think we're going to be giving up a lot of these adaptations. I think a lot of working from home and more more health safety things like that are going to continue to happen. And just different ways that we do business, buying online, things like that. So I think the overall the economy and especially certain areas will progress because of this. And then I think in the short term, we're not going to see very positive changes when it comes to visually seeing it at restaurants or travel or things like that. But I think behind the scenes, a lot of business owners are going to gain a lot more confidence. They're going to not have as much uncertainty around the economy and what's going to be happening in the future. So they'll be able to make more long-term decisions. They'll be able to make hiring decisions, possibly buy equipment or buying assets. And a lot of this has a lot of positive knock-on effects for the economy. So I think both long run and short run, this is great for the economy and good for Janus clients.
Right. Yeah. Great points. I mean, it's a combination of hope, confidence, and some certainty that we're going to be able to move forward. So
yeah, exactly.
Great point. You mentioned the Facebook antitrust. You mentioned this when you were talking about the NASDAQ and having a bit of a midweek struggle. And that was largely due to 48 states and the FTC, which is the Federal Trade Commission, announcing an antitrust lawsuit against Facebook, mainly about WhatsApp and Instagram, perhaps breaking those up. So can you explain to everyone why the government and why these states are going after a company like Facebook, and why does it have an impact on other companies like Google?
Yeah. So a big reason for this is just that it's building a monopoly. A lot of these big tech companies have massive integrated systems, basically empires of businesses that all are integrated, working together, and really are great business models overall. But it really kills competition. And so these agencies exist to build competition in the economy and to fight systems that are killing the competition, which is ultimately what these business models are doing. And you see this with Google, with Amazon. I think Amazon is probably one of the biggest ones. You have the marketplace, you have Amazon Web Services, you have electronics, you have videos. you have all these billion-dollar businesses all in one integrated system, and they all help propel the other ones. It's a big flywheel, and it's a case study that is studied across the world as a great way to build a business that is going to be a monopoly and kill competition. But ultimately, these agencies don't want to see competition killed. So I think the implications of this are that these tech companies are probably still going to be able to grow even if they're broken up, but they just won't be able to grow as fast without an integrated system, and they won't be able to make big strategic buys in the future, which has really helped them to grow and helped cut out other competitors in the market. So it'll probably hurt them in the long run, even though they'll continue to grow, but it will help other tech companies that are trying to compete.
Right. I mean, people don't really realize that Amazon even owns newspapers, right?
Yeah.
Washington Post. So these companies are huge and they're multifaceted, they're multi-industry, and at some point they become so big that it starts to eliminate competition.
Yeah, exactly.
So now to two companies that were in the media. Probably a lot of our clients have heard these names: DoorDash and Airbnb. Both had IPOs, which is an initial public offering, with just wild success. They actually both more than doubled their asset value of the company in a couple trading days. So what does this say about the health of the market, and perhaps the appetite for these types of growth companies? Is this kind of a flash in the pan thing, or is this just a general barometer of the appetite of the market?
I think that the market just is in love with technology right now, especially technology companies that are based on platforms. Like a lot of people don't know, but Facebook primarily is a platform for advertisements. Amazon is a platform for a lot of products, and these companies have done extremely well. And so DoorDash and Airbnb are platforms, and so a lot of investors are really into these platforms. And like you said, DoorDash is having an IPO at the exact perfect time for them. If they were to do this IPO in the next year or 2 years, there's not going to be near the amount of buzz around something like DoorDash as there is right now. Everybody's using them. When it comes to Airbnb, this year hasn't been a great year for them. In March and April, their business was down 80%. This last quarter, business was down about 20%. So it's not very good, but still Airbnb has really been a favorite of a lot of investors and venture capitalists for the past few years. And probably if they were to IPO a year ago, they probably would get a lot higher of valuation, but still their valuation is, I think it's about 86 billion right now, which is higher than any other online kind of travel site. Plus it's higher than Marriott and other, large like international hotel chains. So still they have a very high valuation. And I think it really builds the resiliency that they need. I think in case they ever come into cash struggles in the future, they know that they have the public markets that can help them raise funds if anything like this happens. So it builds for their long-term resiliency, I guess.
Right. Well, that's it for this week. We want to wish all our Genus clients a very happy holidays. Mike and I, you probably won't see us again till the new year. So happy holidays to you all, and thank you very much.
Thank you.